Hey everyone, I am going to walk you through how to do the work together for section 21-1, and this is on page 627 in your textbook. So I'm just going to read the instructions here. Betty Jensen and Glenn Chow agree to form a partnership on April 1st of the current year. The partnership assumes the assets and liabilities of Ms. Jensen's existing business. Mr. Chow invests cash equal to Ms. Jensen's investment. Partners share equally in all changes in equity. The March 31st balance sheet for Ms. Jensen's existing business is shown in the working papers. Source document, same as always, memorandum is M, receipt is R. So I have up here the finished product, and I'm going to go over how I did that just to save time for this video so you don't have to wait for me to write. So the first transaction is on April 1st. We received cash from partners Glenn Chow as an initial investment, $42,000, receipt 1. So you would put in your date, which would be April 1st, and then the document number, which is R1. You would then go ahead and put in the account title, which is Glenn Chow Capital. This we haven't used for a while. Since this is a partnership, we have capital accounts again, which means we'll also have drawing once we get to that. Now, capital has a normal balance of credit, so we'll put in a general credit of $42,000, and then cash debit will be $42,000 as well. So that first one here is just the example of what it would be like if a partner came into the partnership just bringing in cash. Pretty simple transaction. Now the next one, this person is basically bringing their existing business into this partnership, and they're going to combine it to make a new business. So the next transaction is also on April 1st. This is going to be from Betty Jensen's existing business as an initial investment, $42,000, receipt 2. So you can put in your date of April 1st, and then you can also put in R2. Now, this is going to be from the previous side of the work together page in your workbook, where you'll get their balance sheet. And what we're going to do is we are going to put in all of these numbers and where they should go. I did write some D's and C's by this for debit or credit. So the first one here is going to be cash. That one is going to be a debit. So we'll put in our cash debit of $11,371.85. We don't write an account title for that because there's a special amount column that works for it. The next one we have will be accounts receivable. Accounts receivable have a normal debit balance. So because of that, we need to write accounts receivable, because the special amount column for accounts receivable has a credit. Since this is the cash receipts journal, we would typically give accounts receivable a credit when people pay their accounts. This is a special type of transaction though, since they're investing into the company. So they write accounts receivable, give it a general debit. The next one will be the allowance for uncollectible accounts, and you could write that next. However, I'm going to write my credits all together at the bottom because debits should be listed first and then credits should be listed after that. If you do it not in that order, it would be fine. I'm not going to count it wrong though. So merchandise inventory, that needs to have a debit of $24,350. Let me move this down here. Nope, too far. All right, same with supplies and equipment. We'll put supplies will be a debit of $620.90, and then equipment, which is a plant asset, will be a debit of $8,778.75. After that, we're going to list our credits, so we're going to put in allowance for uncollectible accounts as a credit of $73.45, accounts payable, a credit $5,483, and then owner's equity, we're going to put in our Betty Jensen Capital as a credit of $42,000. So if I get rid of this here, you can see what the final transaction will look like. If you were to add up all of your debits and your credits, it will equal. You can try that too, just to make sure that everything is equal. I did cross out a couple of things on here just to show you like things we're not putting in here. We're not putting in this number. This is our book value of accounts receivable. We don't need to put that in there. To get your book value, you would just take accounts receivable and subtract your allowance for uncollectible accounts. And we're also not putting in totals. That's not part of our transaction that we need to put in. If you're unsure if they're debits or credits, they're just going to be their normal account balance. This here is a balance sheet, so no matter, it doesn't really matter where it's at. It doesn't mean anything for when we're going to be journalizing it. If you're unsure what their normal balance is, if you just look in your book or refer back to this, it'll be the same. So your assignment is the application problem for 21-1, which is on page 637. This one, the balance sheet is going to be in your textbook, but just the same two type of transactions.